Turn your statement into a clear picture, label, total, and see the pattern. This is where the lens becomes a map. You've understood essential, discretionary, and luxurious in principle. Now we'll paint your last 30 days with those 3 colors and let the pattern tell you what to do next. The goal isn't perfection. The goal is legibility. When your spending is legible, decisions get easy and willpower stops carrying the whole load. Open your workbook to today's page and keep your banking app or card statement handy. Choose one primary place to read from, either your main bank account or one credit card you use most. If you pay your card from your bank, don't classify both or you'll double count. We want real spends, not transfers between your own pockets. Ignore obvious transfers like to savings, to FD, to mutual fund SIP, or to spouse, investments and internal moves live in day 3. Focus on outflows that bought goods, services, or experiences. If you see a single credit card payment, debit on your bank statement, switch to the card statement for detail and classify there. Now make a quick list of the 20 to 30 biggest or most frequent transactions from the last month. If your statement is long, group similar ones into a single line. All Swiggy orders can become food delivery, multiple petrol pumps become fuel, a cluster of Amazon orders can be Amazon household or Amazon gadgets, depending on what they were, subscriptions become subscriptions, and so on. You are building a picture, not doing tax audit. One rent or home ME line is fine. Utilities can sit together. Groceries as one line. Eating out as one. Commute as one. School fees, medical, personal care, shopping, data plans, OTTs, gifting, travel, miscellaneous small UPI if you must. If cash withdrawals appear, treat the cash you actually spent as groceries, travel, miscellaneous cash. Don't let ATM 5000 rupees sit as a black box. Give it a label that reflects what it became. Next to each line, write a single letter, E for essential, D for discretionary, L for luxurious. Use your life, city, safety, and values to decide. Rent, electricity, broadband you work on, groceries, school fees, usually essential. Eating out, delivery, extra data, shopping, cafes, small gadgets, usually discretionary. Designer buys, premium dining, the third OTT, launch day phone, 5-star stays, usually luxurious. And remember context, a cab at 10 PM after a long shift may be essential, the same ride on a lazy Sunday might be discretionary. Let your top 3 values referee. If freedom is a top value, high fixed costs and new MS deserve extra scrutiny. If family is central, a weekly dinner out can be a proud discretionary keep. If security matters, proper health expenses are essential, while revolving credit interest is an immediate luxurious liability to kill. Write the amount for each line. Don't obsess over exact rupees. Rounding to the nearest 50 rupees or 100 rupees keeps you moving. If a refund appears, net it off the related category or list it as a negative in the same line. Just avoid counting a purchase without its matching refund. If a business expense slipped into your personal card and your company reimbursed it, exclude it. We are tracking your life, not corporate pass-throughs. Now total the amounts in each letter bucket. Add all the E lines to get an essential total, all the D lines for discretionary, and all the L lines for luxurious. Add the 3 totals to get your total spending base for this exercise. Divide each bucket by the total to get rough percentages. If maths makes you stall, do a quick mental split. If total spend is about 100 rupees, then 60 rupees of essentials is 60%, 30 rupees of discretionary is 30%, 10 rupees of luxurious is 10%. Round generously. You are aiming for a clear shape, not a perfect pie chart. Take a minute to look at the shape without judgment. Some months, essentials will feel heavy because of fees or annual bills, that's fine. Some seasons, discretionary will spike because of festivals or travel, also fine. Luxurious might be near zero in a buffer building phase or deliberately present for a planned celebration. The point is not to hit an internet approved ratio, the point is to stop guessing. When you stop guessing, your next 3 moves are obvious. If something feels hard to classify, pick the label that best reflects how it served you this month and add a tiny star to remind yourself it can shift. The EDL lens is personal and dynamic. An AC service in peak summer that protects sleep can be essential. The same service for a spare room in winter is discretionary. A phone ME for a field engineer can be essential. The same ME for a spec-chasing upgrade is luxurious. A cafe bill can be discretionary asset if it bought an hour of deep work that shipped the project. It's discretionary liability if it was just expensive boredom. You'll add the asset liability tag in the next module. For now, EDL is enough to make waste visible. Scan for silent sprawl. Fixed costs, MS and subscriptions, quietly compress freedom. If your discretionary total is dominated by small, monthly charges, that tells you where to focus tomorrow. If luxurious is anchored by 1 or 2 big, unplanned splurges, that tells you to install a 24-hour pause rule. If essentials include things you don't use or need, that tells you to renegotiate or cancel. Patterns are kinder than scolding. At the bottom of the page, write 3 short observations in your own words. Keep them human. You might notice delivery crept in on weekdays, or subscriptions I don't use add up to 1 dinner out, or fuel is higher than I thought, carpool twice a week could help, or groceries are fine, gadget buys are the leak. Then add a single sentence that begins, if I change only 2 lines next month, it would be, and name them. You're not committing yet, you are pointing your attention. Tomorrow we'll choose exact rupee moves. 2 quick edge cases to keep this clean. If your bank shows a big credit card payment, don't classify that on the bank side and also classify the card level items. Pick the breakdown view and stick with it. If you split money with a partner, either classify the joint account as one picture or classify only your personal card account. Don't mix lenses or you'll lose trust in the numbers. And if you see wallet top up, track what the wallet paid for. Top ups are pipes, not spends. Take 30 seconds to box your 3 percentages, essential, discretionary, luxurious, so your eye lands on them tomorrow. You might even copy them to a sticky note for this month's fridge or phone lock screen. E__%, D__%, L__%. Visibility is half the win. You've just done what most people avoid for years. You've looked straight at the month and labeled it without shame. In the next module, we'll add one more column, asset or liability, to the same lines so you see which spends quietly build your future and which ones quietly steal it. After that, we'll translate rupees into hours with your earnings per hour and note the impact duration so the obvious cuts become almost automatic. For now, close your statement, look at your 3 numbers, and notice the shift. This is your money, finally speaking your language.